Hello and welcome today to the webinar Small Business Payroll. I'm Esmeralda Estrada from the Small Business Development Center here in Maricopa. I will be the facilitator for this webinar and I'll be monitoring the chat throughout the webinar. If you have any questions, can you please make sure to put them in the Q&A chat box so we don't lose them in the chat. As everyone is joining us, if you would all like to go ahead and in the chat type a little bit about yourselves, who you are, something about your business so we get a feel of who's here with us. For now, we'll have Anna Manier from the Maricopa SBDC give us an overview of the SBDC.
Thanks, Esme. Good morning, everyone. Before we start today's session, I would like to give you a brief description and overview of the services and resources available through the Maricopa SBDC. The Maricopa SBDC is part of a national and state network of small business development centers. Our main offering is no-fee counseling. Here in Maricopa County, we have 15 counselors spread across the county for easy access to our clients, although we are still working virtually at this time. At the end of our session today, we'll discuss how you can request counseling services. We offer low to no cost programming, just like the one you're seeing today. We also have a variety of tools available for our clients. We are able to provide these services because we are funded on the federal level by the Small Business Administration, here locally by Maricopa Community Colleges, and partnering with the Arizona Commerce Authority. Some of our technical assistance covers a variety of topics and areas with the sampling shown here. During the challenging time of COVID, we continue to assist our clients as they navigate the relief and funding programs. We also help our clients identify and access lenders, offer financial overviews, marketing assistance, and planning. We have counselors who are experts in a variety of areas, including manufacturing, technology commercialization, export and international trade. And through the Procurement Technical Assistance Centers, we help clients access government contract support. The Maricopa SBDC has many resources we make available to our clients. As you can see on the screen, these are all no cost to our clients, which if you went for them on your own, they're quite expensive. Growth Wheel you see here is for business development. Live Plan is business planning. So you can make a business plan on the online platform right with your counselor. It's a great tool. Profit Sense does financial benchmarking data, and we also have access to sbdcnet.org and iBizWorld for market research purposes. And with all that, I'm going to go ahead and turn it over to the star of the show today, Tanya Luken, CPA. She'll take it from here. Thank you.
Thanks, Anna. Hi, everybody. Are you guys super excited to do this? I know you probably just can't. So excited. So anyways, my name is Tanya Luken, and I own a really exciting company called Tanya Luken CPA PC. And we specialize in helping small businesses with their accounting. So, and we recently added HR services. So if you guys ever have any HR questions, feel free to reach out to us too. And let me just make sure. Okay. Hold on, because I lost you guys. Give me 2 seconds. It's being very strange. Because I want to make sure I can see you still. So, all right, there we go. That's better. Okay, so as many of you can just let me know when someone puts something in the chat or has questions or Q&As, that would be spectacular. Okay, so today we're going to talk about small business payroll, and we're going to do a little bit about the CARES Act, because I just want to make sure that if you got PPP loans or EIDL loans or the SVOG for the shuttered venue grants or the RRF for the Restaurant Revitalization Fund, that you guys know what kind of is happening with those things. So just a quick disclaimer, the purpose of this presentation is just to enhance your general tax knowledge, general knowledge on tax matters, and everything that we talk about today is not designed to be specific advice. If you do need specific advice, I would encourage you to contact your accounting or tax professional. So what we're going to talk about today, this is quite the list. What's an employee versus what's a contractor and a joint employer, what you need to do when you hire an employee and what paperwork you need to have, what it means to be exempt or non-exempt, the Arizona sick leave law, the workers' compensation that you're required to have, how to calculate payroll, how to work with the payroll company. Then the forms 1099 MISC and 1099 NEC, which stands for miscellaneous income and non-employee compensation, the PPP and the CARES Act, and the employer retention credit. Then, because it's me, I made a glossary. So today we're going to talk about, there's a couple of abbreviations that I'm going to use. If you get confused or have questions about what these abbreviations mean when we're going through the slides, please ask. So we have plenty of time today to go through everything, all the content, and ask questions. So don't be bashful, because if you're thinking it, someone else is too. And because I have it memorized, I tend to just go right through it. So, okay, so first is FICA, and which is the Federal Insurance Contribution Act. It's deducted from an employee's paycheck at 7.65%. 6.2% is for Social Security and 1.45% is for Medicare. And it's matched dollar for dollar up to the Social Security limit, which incidentally, they literally just raised today. So we could talk about that later, but EE is an abbreviation for employee. ER is an abbreviation for employer. FUTA stands for the Federal Unemployment Tax Act. SUI or SUTA is the State Unemployment Insurance or the State Unemployment Tax Act. The IRS, our favorites, the Internal Revenue Service. ADOR is the Arizona Department of Revenue, which is funny because in Oregon and in Ohio, it's ODOR, which I just think is funny that we can just call them odors. And DES is the Department of Economic Security, which here in Arizona regulates the SUI and SUTA. Okay, so how payroll works. And we're just going to talk about this really quickly for right now. So when you, oh my goodness, hold on. When you have an employee, for example, that earns $1,000, you're going to deduct Medicare and Social Security from their paycheck, which comes out to $62. Then you're going to deduct Medicare from their check, which is $14.50. And then we're just going to assume that there's $10 worth of withholding for feds and $3 for state withholding. So their net pay is $910.50. So when you go to pay them, you're going to pay them $910.50. The difference between the $1,000 that you owed them and the $910 you pay them is not a $90 bonus for you. So you actually owe that in payroll taxes. So you as an employer are required to match their FICA, which is the Social Security portion is a dollar for dollar match, so $62. Then the Medicare is a dollar for dollar match, so another $14.50. And then you have to pay $8 in federal unemployment and $23 in state unemployment. And those asterisks just means that, you know, there's an annual limit on those, but roughly you're going to owe $107.50 in payroll taxes. So when you go to pay an employee $1,000, it's going to cost you another roughly 10%. So in my example here, you're going to shell out cash of $1,107.50, even though you agreed to only pay the employee $1,000. So very quickly, this is how this works. Because of the payroll taxes that the employers have to pay, that's what it's an added burden to employers and an added cost that we have to pay in cash because we have employees. I wanted to talk about employees versus contractors. And I know there was a question that someone had emailed. So this is what the reason that we talk about this and the difference between an employee and a contractor is because if you have a contractor, all of this right-hand side where it says employer pays, it all goes away. So if you have a contractor, you literally pay your contractor $1,000. There's no withholding from them. There's no matching payroll taxes, none of that. It's literally just, here's your $1,000, okay? So how do you determine if you have an employee or if you have a contractor? If you have an employee and you improperly classify them as a contractor, the penalties are steep, and we'll talk about those. But there's three tests that you have to go through to determine if someone is a contractor. So the three tests are behavioral control, financial control, and the relationship of the parties, okay? We're gonna talk about them all in detail. So behavioral control is the first one. It's the right to direct or to control how the worker does the work, when and where they do the work, the tools and equipment they use to do the work, the supplies and services they use to do the work, who controls the worker, who controls the work, and who trains the worker. So let's give you some examples, because this will make, I always feel like examples make things easier. So let's say that I have, let's say, we'll use my accounting firm, right? So I'm going to go hire someone to do accounting work. So do I tell them when and where to be? Yes. Do I give them a computer and all of their software subscriptions to do the work? Yes. Do I buy them office supplies and a printer and toner and stuff? Yes. Do I tell them, am I a control freak and maybe tell them a little bit too much about how to do their job? Yes. So, but like I like to, and I would train them. So in that instance, because I have such control over that worker, then they would meet these behavioral tests to be classified as an employee. Okay. So think of it differently. Think about like, I noticed there was a general contractor that was here today. So let's just pretend that for her business, she's a general contractor. So she goes out and she is, let's say she's building a new office building, and her workers usually do all the framing and all of that kind of stuff, but she hires someone to do the plumbing work, right? So does she provide all of the materials and knowledge for that plumber? Probably not, right? Does she tell them where the job site is and what time they can come and do the plumbing work when they're ready? Probably yes. But because she's not supplying their special tools, their equipment, she's not training them how to do the plumbing, the actual plumbing work. And she's probably buying the supplies and services for them, the pipes and whatever else. So in that example, that plumber is probably not an employee. Okay. Questions? Clear as mud? Okay. Financial control. So the next one is financial control. So who directs or controls the business aspect of the work? Is it an employer with employees, or an independent contractor who's in business for themselves? So the factors include a significant investment, unreimbursed expenses, the opportunity for profit and loss, or the services available to the market, the method of payment, and the nature and degree of control over the work. So let's take some examples again. So for my workers, for example, have they made a significant investment in their job? Probably not. Like they didn't go out and buy a van to put all their plumbing supplies and parts in, correct? So do they get reimbursed for their expenses? Yes. In our example with the contractor and the plumber, do we reimburse the plumber for his expenses? Probably not, right? The opportunity for profit or loss, this one and the next one, services available to the market, are the easiest, I think, for us as entrepreneurs to understand, because who has the ability to go get new business, go get new clients, go get new jobs, right? So that opportunity to make our own profit and the risk we take that we might generate a loss, and are our services widely available to anyone in the marketplace? Yes, in the example of my plumber, but likely not in the example of my employee, of my worker, because is my worker going to go out and get new business for the firm? Probably not, right? So method of payment, how often are you paying them? You can have arrangements to pay your contractors every 2 weeks, every week, once a month, whatever. You can make those arrangements, but it's kind of globally, like with the behavioral control and with the financial control, does it look like a duck and talk like a duck? Then it's probably a contractor or an employee. Okay. And then the nature and degree over the control of the work. So this goes back to kind of like who has all the control, who holds all the purse strings. Okay. So does that make sense? The opportunity to generate your own profit and loss, and can anyone go out and hire that person? Okay. When you're starting out with a business, sometimes you have no choice but to take all the business that comes in the door, right? So you might have a customer that is 90% of what your business does. That doesn't necessarily mean financial control, okay? All right, so the relationship with the worker. Is there a written contract? Do you provide the worker with benefits such as insurance or a pension? Does the worker provide key services that are important to your business? Is the work expected to be permanent? And you can actually file a form SS8 and ask the IRS to tell you whether someone's a worker or not. However, I wouldn't necessarily recommend it. So just keep this in mind. When you're looking at measuring who's an employee, who's a contractor, you just kind of want to make sure that, if you do determine that someone is a contractor, that they have that opportunity for profit and loss. Their services are available to other people in the public, that you're not providing all the tools for them and buying them their tools and equipment and things like that. Okay. A couple of new things, they changed a little bit of the rule. So the amount of skill required for the work. So for example, back to my plumber. So chances are is that because that plumber has those skills and did that they would be more likely to be a contractor than an employee. However, if I run a plumbing company and I go hire a plumber, then that would make them an employee. The degree of permanence of the working relationship between the worker and the potential employer. So if you're hiring someone or you're offering someone employment or work, if it's going to be forever or as long as forever until you retire, then you want to look at that degree of permanence too. Is that really going to make it a sustainable, is it going to make it, if it's permanent, it's more likely they would be an employee than a contractor. So then you'd have to go back to those behavioral control tests and the financial control tests. And then whether the work is part of an integrated unit of production, this one's a little bit harder. So it's harder to understand. So if you produce a product, if your company builds a product, my email's at the end, just on my phone number. So just email me or call me and we'll go through what that means, okay? The actual practice of the worker and the potential employer is more relevant than what may be contractually or theoretically possible. So even if you have a document that says, that like, let's say I contracted with Anna to do some work for my accounting firm. Even if I have a contract that says you are a contractor to me, if I don't meet those 3-factor tests, I'm going to lose, right? And if I lose, what happens is all of these costs at the front, the right-hand side of this, where there's the Medicare and Social Security tax and the unemployment, the government will come back to you and say, you misclassified this person. They should have been an employee. You owe us all this money, okay? That's why you want to get it right. Okay, questions? How are we doing? Feeling all
We
right?
do have one question. So is it required for contractors to work for other people?
So maybe. So not always necessarily, and it could be, but it goes back to this like opportunity for profit and loss and the services available to the market. So if that contractor can go out and get new business, but chooses not to get new business because they only want to work with you, then that's a little bit different. So, but if it's going to be permanent, then I would say they're probably more likely an employee. So if that particular worker isn't registered with the state as a business, they don't want any other clients or other work, and they're not going to go looking for it, and you tell them what to do and how to do it, they're probably an employee.
All right, thank you.
Sure. Okay, new hire paperwork. So when you determine that someone is an employee, you have to collect all these forms, okay? So the first one is a W-4 form, which if you've ever had a job in the past, you would have had to fill out a form about how much federal income tax withholding you want from your paycheck. The A4 form is the state version, the Arizona version of the federal form. The I-9 is to prove eligibility to work in the United States. eVerify, because we're in Arizona, we have to eVerify our employees. We'll talk about that. And then there's a new hire, Arizona new hire reporting site. And we also have to report new hires. Most payroll companies will do your new hire reporting, but they will not do your eVerify. I also suggest that you get an employment application from them, because you can fire someone and not have your unemployment account charged if they lie on their employment application, but not if they lie on their resume, okay? Collect their emergency contact and write an offer letter. So once you have your new hire forms, you're required to keep those. Plus, the Arizona Department of Economic Security requires that you keep their check stubs and canceled checks for all the payments that you made to those employees, a check register, and a payroll journal that shows the gross pay to net pay calculation. So remember how in my example, we had $1,000 of gross pay and the net pay was $910. You need to keep that calculation of how you got from the $1,000 to the $910. There's quarterly and annual payroll tax returns. So combined in Arizona, you're going to file 15 sets of returns, and you're going to file an extra one for the feds, an annual one. You need to keep W-2s and W-3s, which you file once a year. And for each payroll, you need to collect the starting dates and ending dates of that pay period, the total amount that you're paying for all services, and the date of the week that had the largest number of employees worked, which we'll talk about in a minute. So a couple of things. One, nobody has check registers anymore. Like my mom pulled one out the other day and I literally got into fits and giggles because I hadn't seen a check register and I don't know how long. Electronic copies of all of these things are entirely permissible. Most of us are also using direct deposit or will expect to use direct deposit if we have employees. So with direct deposits, there is what's the equivalent of a check stub or a canceled check with those direct deposits, okay? So just know that electronic versions of all of this are totally acceptable as well. For each worker, you have to know, and some of these seem kind of strange, but you'd be surprised how many times I've come across this in my professional career, but you have to know your employee's first and last name. You have to know their social security number. You have to know the date of hire, the date they were rehired, or the date they returned to work. You have to know their date of termination or separation and the reason that they left your employment. You have to know the amount that you paid to them each calendar quarter and the amount you paid to them each pay period, and the amount and date of any special payments like a bonus, and the place where the services were performed. So the other thing, especially now in the virtual world that we're living in, it's very easy to create what's called nexus, which means that if you, so for example, I have an employee that lives in Oregon, right? And because of the nature of my business, she can do accounting work for our clients from her home in Oregon. However, what happens is because I have an employee in Oregon, I have to have a second location for my workers' comp so that my workers' comp carrier knows I have an employee in Oregon in a different state. And because of weird tax rules from the state of Oregon, anytime she works on a client that is located in Oregon, because she's in Oregon, I personally have to pay income tax in Oregon for that money. So let's say my firm does $100,000 worth of revenue this year. If she generated $20,000 from her doing work in Oregon for Oregon clients, I have to pay income tax in Oregon of $20,000, and I pay Arizona income tax of $80,000 and federally $100,000. So that's why you have to know where the services are performed. Okay. Questions?
Yes, it seems we just received one. So it says, all this seems so overwhelming. Is most of this what the payroll company will do, or is there different software recommendations for the business to obtain?
Yes, most payroll companies will do a lot. Well, they will keep all of this, but for example, you have to tell them all the info, this list of the W-4 and the A-4 and the I-9, those documents usually go to the payroll company, but you have to make sure they're filled out correctly. Most of it's fairly easy. We're going to talk a little bit about the I-9 in detail, but you would provide this information to the payroll company. This set of lists, the payroll company would absolutely do for you. And this set of lists, the payroll company will track all of this for you, but you have to tell them most of it. So you have to tell them the date of hire. You have to tell them if they are terminated and why they're terminated. But yes, most payroll companies can do all of that. And I personally have no preference of payroll companies. So work with whoever responds the best and whoever you feel like you can communicate with, because inevitably something's going to go wrong and you want to make sure that you can get an efficient response. Okay. Exempt versus non-exempt employees. So first, exempt means exempt from overtime or a salaried employee. Non-exempt means they're not exempt from overtime and they're an hourly employee. Non-exempt employees, hourly employees, are paid 1.5 times the regular rate of pay for any time in excess of 40 hours in a payroll work week. Don't do flex time. So 42 hours in week 1 and 38 hours in week 2 is not 80 regular hours in the pay period. There are 2 hours of overtime. So in this example, you would pay 78 regular hours and 2 overtime hours. Arizona employees must be paid the minimum wage. It's currently $12.15, I believe. And then it's going to go up again January 1st. If they make commission, they still have to meet the minimum wage requirements. So even if you have a commission-only employee, you have to make sure that they're making at least $12.15 an hour. An exempt employee is exempt from minimum wage and overtime. It's a predetermined fixed salary that's not based on the quality or the quantity of work. There's the duties include some kind of executive duty, administrative, professional, salespeople, or certain computer employees. And their salary has to be more than $455 a week, which is $23,660 a year. So, for example, you cannot, let's say that you owned a car dealership, right? Your salespeople could be exempt employees. However, if you have a garage and you provide repair services, there is an exclusion specifically for mechanics. So mechanics cannot be exempt employees. They have to be non-exempt or hourly employees. Does that make sense? Okay. Joint employers. There's a 4-factor test to determine if you're a joint employer. So we're going to run through these because when you say things like 4-factor test, people's eyes glaze over. So if you have more than one business, this would be important to you. So if you have more than one business, do you have the ability to hire and fire an employee, to supervise and control the employee's work schedule or conditions of their employment, determine their rate of pay and their payment method, and maintain their employment records? Okay, so again, I think examples are easy. Joint employers is important, and you'll see why. Okay, so the first example, an individual works 30 hours per week and has a cook at one restaurant establishment and 15 hours per week as a cook at a different restaurant establishment affiliated with the same nationwide franchise. These establishments are locally owned and managed by different franchisees and do not coordinate in any way with respect to the employee. Does anybody think, yes or no, do you think that they're a joint employer of this cook? So there's a restaurant here in Tempe, there's a restaurant in Levine, let's say they're both Subways. Each one of them, there's an employee who decides he wants to work in Tempe for 30 hours for me and for 15 hours in Levine for Anna. So does that mean that we're joint employers? What do you think? No, they're not joint employers, okay? Because the two businesses are totally unrelated. I might own one, Anna might own the other, or Esme might own the other, like however it works, like they're two separate businesses. So look at this example. An individual works 30 hours per week as a cook at one restaurant establishment and 15 hours a week as a cook at a different restaurant establishment owned by the same person. So let's say I own them both. Each week, the restaurants coordinate and set the cook's schedule of hours at each location, and the cook works interchangeably at both restaurants. The restaurants decided together to pay the cook the same hourly rate. Are they joint employers? And you probably guessed it, they are joint employers. So here, if you have an individual and you control all of these factors, so you control how much they make, what their schedule is, where they're working, you can hire and fire them. If you have that level of control over the worker, then you're a joint employer, even if you have two legal separate businesses, okay? which means that if your employee works 30 hours at one restaurant and 15 hours at a second restaurant, you owe them $5 of overtime, or 5 hours of overtime, $5, 5 hours of overtime. So this person would get 40 hours of regular pay, 5 hours of overtime pay. Okay, questions about that?
We did have one question. Let me just scroll back. So how are tips integrated in the payroll, and how do you know credit tipping works?
Tips are weird. I'll just start there. So a couple years ago, and I would say it's probably been 15 now, there's been the burden of reporting tips was pushed to the employer instead of the employee. Okay, so no, as an employer of tipped employees, it's your job to make sure that the employees report their tips correctly. Secondly, in Arizona, I feel like the minimum wage, I'd have to double check, but I feel like the minimum wage still applies and then employees are tipped. There are some states where tipped employees are allowed to make less than $12.15 or less than there's a federal tipped minimum wage. So I think federal minimum wage is $7.25 or $7.50, something like that. But if somebody's a tipped employee and federal minimum wage applies in that state, then a tipped employee only has to make like $3.25 or something. So it's not the same if there's tipped employees, federal minimum wage. Then for tips for an employee, there's two kind of tips basically. So there's credit card tips, where when you sign your bill and you put that you want to tip them $5 and then you sign your name, that's a credit card tip. The second is a cash tip, where I just leave a $5 bill on the table. Okay. So credit card tips, you would tell to your payroll company how much an employee's credit card tips were. You also report to your payroll company how much the cash tips are for an employee. There's two ways to handle both. You can handle both of those the same way. So if, as a restaurateur, you can pay out your employees their credit card tips in cash every day or at the end of every shift. Okay, so let's say I leave $5 as a tip on my credit card, and I'm going to leave $3 in cash on the table. Okay, so what happens, you have a choice as an employer if you want to put that $5 onto the employee's paycheck and add it to their paycheck, or you can give them $5 in cash at the end of their shift. Okay, so that's your choice. Just document what your choice is. I would say if you don't have a heavy cash business, then put the $5 on their paycheck. Okay, and then the payroll company will just take it out of your bank account and give it to the employee. So the employee will get their cash from the check. Regardless, if you give the employee the $5 in cash and they keep the $3 that they got in cash, they have $8 worth of tips. You would report that $8 to the payroll company, but they're not going to take the $8 out of your bank account again. They just do it as an adjustment on their end. Okay, so the employee's tips get reported, but it's like a non-cash transaction. There's no more cash because you already gave it to the employee. So that probably was really unclear and confusing, but so let me know if you have any more questions about that. But that's roughly how it works. So you get to decide as the employer what you want to do. And a lot of times the industry will dictate what's acceptable. So for example, if you have like a fine dining establishment, it's more common to have all the tips reported with their payroll. But if you're working at, if you have more of a classic dive bar kind of shag carpeting, peanut shells on the floor kind of place, it's probably more common to pay out those tips in cash every day. Okay. And when you're considering what to do, think about how much cash you collect, because the last thing you want to be doing is going to the bank every day and making huge cash withdrawals just so you can pay out your employees their tips. Okay. Does that make sense? Hopefully. Okay.
I believe so.
Perfect. All right. So let's talk about sick leave. So a couple years ago, we passed Prop 206, which means that employers in Arizona are required to pay for sick leave for their employees. If you remember how one of the things we talked about, I know you guys are gonna be like, why are you doing that? So right here, the last bullet, the date in each week with the largest number of employees worked. So that applies because of Arizona sick leave for one. Okay. So if you have 15 or more employees, you accrue 1 hour for every 30 hours they work. Meaning that if an employee works for 30 hours, they get 1 hour of sick leave. They're eligible for 1 hour of sick leave. They're not entitled to accrue or use more than 40 hours a year. So if I'm working for 30 hours, I get 1 hour of sick leave. I can do that 40 times, okay? If I use my sick leave, if I use all 40 hours of my sick leave, you don't have to give me more, okay? And even if I do accrue it. Employers can select a higher limit. So for example, I'm in an industry because I work at a CPA firm or own a CPA firm. It's customary for me to give my accountant employees 80 hours of vacation every year. So my policy is more generous than Prop 206, and then I'm allowed to do that. Employers can elect a 90-day waiting period, which means that if I start today, I'm still going to accrue 1 hour for every 30 hours I work, but I'm not eligible to use it for 90 days, okay? Balances can roll forward, but don't need to be paid out at separation. So if I decide to leave next April, you don't have to pay me out for any of the accrued sick time that I've built up and never used, all right? If you have 15 or fewer employees, the only thing that changes is the amount of hours that you accrue for an employee. So if you have 15 or fewer employees, you only accrue 24 hours a year instead of 40 hours a year. But other than that, the rules are the same. So that's why it's important to determine how many employees you have each week that you work. The other thing is when you're measuring the number of employees, like if you're a growing company, you might have at the start of the year 12 employees and at the end of the year 18 employees. So when you make that switch, it's a bit of a gray area, but once you cross that 15 employee threshold, you should probably up your accruals to 40 hours a year. Okay, questions?
Yes, we do have one. Are there parameters on what sick leave can be used for? Is documentation required at any point?
So let me write that down. So I'll show you at the end where to find the information, but basically, yes, you can require documentation, but not for 1 day. Like there's a rule that says, and I can't remember if it's 2 days or 3 days, but if an employee is going to be gone for a certain number of days, you can require them to return to work with a doctor's note. And as far as what it can be used for, it can be used for their injury or illness or someone in their family. And what constitutes a family is fairly generous and more in the employee's favor than in the employer. So good question, but I'll show you where that is. Okay, any others?
No, that's the only question we had.
Perfect. All right, let's talk about workers' comp. So workers' compensation insurance is mandatory under Arizona law for employers to have workers' compensation insurance for their employees. Workers' compensation is a no-fault system in which an injured employee is entitled to receive benefits for an industrial injury, no matter who caused the job-related accident. I'm going to tell you a funny story about this in a minute. You can obtain workers' compensation insurance from any insurance company licensed to issue workers' comp policies in Arizona. Employers are required to carry coverage regardless of the number of workers they have, part-time, full-time, minors, undocumented workers, or family members. It is not required for independent contractors if the contractor has their own coverage. Okay, a couple of things. The no-fault system. Do you guys know when you go to the car washes and there's that guy there that wants to fix the windshield chip that you have, the rock chip in your windshield? That stuff that they squirt into the windshield is called resin, and it's really flammable. So I was working with a company once that did that. And one of their employees was showing off for some girl that he likes. So he squirted the resin like all over his hand and then lit his hand on fire. And which, like, all of us are probably like cringing, like, what a moron. But two, like, it didn't matter that he did that to himself, right? It didn't matter that my client had a policy that said you can't light yourself on fire at work. None of that matters. So my client still had to pay for all of the workers' comp coverage to fix that fella's hand, even though he did it to himself, okay? So when they say no fault system, that's exactly what they mean. It doesn't matter if your employee does something dumb, you're still gonna have a workers' comp incident. So if you do work in dangerous industries, you want to make sure that you're like routinely reminding people, hey, don't light yourself on fire at work. You know, like, you wouldn't think you'd have to say that, but apparently sometimes you have to say that. So, okay, so then the other part I wanted to talk about here is the independent contractors. So if you do have a worker that you determine as an independent contractor, if they have their own workers' comp coverage, you don't have to cover them. If they don't have their own workers' comp coverage, you have to get them to sign a waiver saying that they understand that you're not going to cover them under your policy. Your insurance carrier or broker will have that waiver, okay? Because, for example, in Arizona, since I own my business, I don't have to have workers' comp coverage on myself, okay? Like, I don't have to cover myself under my own workers' comp policy. As a business owner, I'm allowed to say, I don't want coverage. So I have a client that's an HVAC company here and is owned by a husband and wife. And the wife mostly does a lot of the office duties and paying the bills and things like that. She does more of the management part, while the husband still climbs on roofs and through attics and whatever else. So for their workers' comp policy, we have told them, we don't want to cover her, but we want to cover him, okay? Because he's still participating in the work, all right? Does that kind of make sense? We're going to talk about a little bit more on workers' comp. So if you have questions about this, let me know and I'll answer them in a minute. Okay, so how workers' comp works, you estimate your total payroll cost for the year. You describe the industry of what you like, the industry you're in and the job duties of each employee. Then you pay a premium throughout the year based on X dollars per $100, which basically just means a percent. Okay, the algebra on that is just a percent. There's experience modifiers or previous accidents that you've had. So like my client who had somebody that lit himself on fire, that counts as an experience modifier. Then there's industry modifiers. So for example, I provide professional services and my workers' comp rate is going to be a whole lot different than someone that owns a mine, for example. Then there's surcharges, fees, minimum premiums, monthly fees, and statement fees. Out of those four things, you can control only number 4. The other 3 items are usually comparable between carriers. So basically, like when you go to get your workers' comp policies, you tell them, I have this many people working for me. This is what they're doing. This is what my company does. And then they're going to come back to you and say, this is how much your policy is going to be. And as long as you're providing the same information to different carriers, you're going to be able to find the best policy. So for example, if you tell one insurance broker, insurance carrier that you're going to have $100,000 of wages for the year, but you tell the other one you're going to have 80, the one with $80,000 is going to come back with a better quote, even though their rate per $100 might be higher. So make sure you're giving them the same information when you go to shop the policy. At the end of the year, you get an audit. So if you estimated your payroll to be $100,000 and it was actually $75,000, you can get a refund. If you estimated your payroll to be $100,000 and it was actually $150,000, they're going to send you a bill. In each instance, the carrier will adjust your new payroll estimate to be the prior period audit amount. Consider, if you're a growing company, reporting your payroll to the carrier during the policy year, or save money because you're going to get a bill. So I hired 2 employees. Actually, I've hired 4 employees this year. So I hired 2 in February. And when I hired them in February, my workers' comp policy renews in March. So I didn't even bother to tell the carrier, whatever, they're going to send me a bill in March. I'm going to report my payroll. I might have to pay a little bit extra to cover those employees for that, basically when I hired them in February to when my policy came up in March, right? However, I did just hire 2 more people at the end of August. So I called my insurance company and said, hey, I'm going to have another $100,000 worth of payroll. So they adjusted my premiums, and now I have to pay a little bit more each month than I would have originally. But because of the industry I'm in, my workers' comp, I know you all will be jealous about this. It's like $200 a year, even though I might have, $200,000 worth of payroll, because what's the worst that's going to happen? We're going to get a paper cut and gangrene and our finger's going to fall off, like highly unlikely. And my employees, I do remind them to not set themselves on fire. So, okay. Questions about workers' comp?
Yes, we did have one in the chat. It says, I have a question about workers' comp. We have been contacted by, I'm assuming it's the Indian community, I'm not sure, saying we need it when it's just myself and my husband. So there's just 2 of them.
As long as the
Industrial Commission, I am so sorry, Christy.
Yeah, so the Industrial Commission regulates workers' comp, and Christy, just email them back or call them up and be like, hey, we own the business. You might have to fill out some kind of waiver form for them to let them know that you guys are the business owners. But if you're in Arizona, you're not required to carry workers' comp on the business owners. So, but the Industrial Commission regulates workers' comp policies in Arizona, and industrial claims and accidents and all that kind of stuff.
She just said I did and filled out the form, but they insist I have to cover my subs.
Cover your sons?
Subs.
Yes. If your subs don't have insurance, then you have to cover your subcontractors. But if your subs sign a waiver, then you can provide that waiver to the Industrial Commission. Because again, if they're business owners, they don't have to have insurance, workers' comp insurance.
Okay, and then we have another question. As an owner working in your CIE, are you considered an employee, and do you have to include your wage in the aggregated wages for the compensation?
Yes. What was that first part? Can you say that again? If you're an employee where?
Working in your CIE.
CIE.
I'm not sure.
Me either. Let's see what they say.
We'll give it a few seconds. Your own company.
Oh, got it. Yeah. So it depends. So you guys will, I'm going to give you a little teaser and then we can figure out what date it is later, but you guys should come to the income tax class that I teach as well. So if you, your legal structure plus your tax filing status determine if you're required to be an employee of your own company. So very quickly, if you're a single member LLC, you are not an employee. If you are a multi-member LLC that didn't tell the IRS to do anything different, you are a partnership and you are not an employee. And your partner is not an employee or partners. If you are a LLC, either single member or multi-member, that told the IRS that you want to be taxed as an S Corp, or you're a corporation that told the IRS you want to be taxed as an S Corp, then yes, you have to be an employee. If you are a C Corp, which none of you should be C Corps, but if you are, well, there could be reasons you would be a C Corp, but most of us don't want to ever be C Corps. If you are a C Corp, you would also be required to be an employee. So kind of, I have a corporation, I'm an S Corp, so I am an employee of my own company. And earlier this year, you'd be pleased to know, I got a notice from DES that said I fired myself and I had filed for unemployment. So that was kind of curious. So, okay. All right, I'm gonna go on. Oh, more?
There was just one more. So I work in the industry, the event industry. Sometimes a client employees unload my boxes. Are they responsible if their employee drops a box on their foot? I unload on their property.
Okay, so if you're doing events and someone is helping you unload your products, whoever, it's a no fault thing. So whoever's employee that is would have the workers' comp claim, but that isn't going to prevent that workers' comp carrier from coming after you for improperly loading a box or something like that. Or, you know, so there could be some kind of mitigation there, but usually your liability insurance would cover that. So, and if you're not sure if you have that type of coverage, talk to whoever your liability carrier is, okay? Or your broker or whoever sold you the policy.
All right, thank you, Tanya.
You're welcome. One more quick thing about workers' comp. There's a lot of insurance companies out there that only sell that kind of insurance. They're not insurance brokers that sell a variety of insurance. When you're shopping workers' comp, if you go to kind of those proprietary insurance carriers where it's like, you know, this national brand, and you walk into that office and all they sell is that national brand, you're more likely going to get a higher workers' comp premium than if you went to a broker. And that's just my 20 years of experience there. Okay, calculating payroll. This is so exciting. And yes, the payroll company will do this for you. Okay, so we're going to take two employees. So the employee on the left is single, and on their W-4, on their federal withholding form, they put single and 0. The employee on the right is married, and on their W-4, they put married and 3, right? We owe each employee $1,000, but you can see their federal and state withholding amounts are really different, right? Employee number 1 has $40 of withholding, and employee number 2 only has $13 of withholding. So the difference in the net pay here, like, it isn't, your payroll expense for this is still $2,000. It's not going to be this, you know, 1,800 and change that the bottom line is. All right. The employee gross pay was the same, but their net pay was different because of their choice to withhold more or less. Social Security and Medicare were the same because it was based on the same gross pay. So you see, because we agreed to pay each employee $1,000, we still had $62 of Social Security for both employees, and we still have $1,450 of Medicare for both employees. The payroll expense for this company would be $2,000, not $1,794. The employer is responsible for the payroll taxes, the FICA match, so the Medicare and Social Security match, plus the unemployment. The company is responsible for paying the employee withholdings plus the payroll taxes to the IRS, the Department of Revenue, and DES. So when I said that, all of the deductions, so all of this $62, let's see if I can make something fun. All of this and all of this, both of these amounts are not bonuses for you to keep. You have to send that money to the appropriate people, and the appropriate people are the IRS, the Department of Revenue, and the Department of Economic Security. So when do you make those payroll taxes? So you make those payroll taxes for most employers by the 15th of the month for the prior month. It can be as often as weekly. The IRS will tell you the frequency to deposit the money. Arizona follows the federal frequency. State unemployment and federal unemployment are due quarterly. So, for example, today is October 13th. On Friday, payroll taxes are due to the IRS and the Department of Revenue for the month of September. So all of the payroll taxes that I withheld from my employees, plus my Medicare and Social Security match, plus my Arizona, all the employee Arizona withholding, all of that amounts are due to the IRS and the Department of Revenue by Friday. Okay. However, the state unemployment and federal unemployment are due quarterly. September 30th ended third quarter, and those payments are due by the end of the month following the end of the quarter. So, which means that third quarter, September, ended September 30th, and federal and state unemployment are due October 31st. sorry. There we go. Payroll taxes for Fuda and Suda end at $7,000 in annual wages. For a full-time, year-round employee, they'll hit the wage base limit sometime in April or May, and payroll costs will always be higher at the start of the year. So think about each employee kind of in a line, right? So they start out the year in January, and you have to pay federal and state unemployment until they reach $7,000. Okay. Once they get to $7,001 worth of annual wages, you stop paying unemployment on them. Okay. In Arizona, every state is a little bit different. My employee in Oregon, I pay for the first $36,000 she earns. What happens next is that, so your payroll costs at the start of the year are always going to be higher because none of your employees have hit the $7,000 yet. Okay. The next bullet point, if you have high turnover, you're going to keep paying that $7,000. So if you hire an employee in January and they don't work out and they leave in March, and then you hire a new person in April, that $7,000 starts over again. So it's $7,000 per each employee. As a general rule of thumb for a service-based business, for each $1 that you pay an employee, there's going to be 10 cents in payroll taxes and workers' comp. But that's an average throughout the year. Everything's going to be front loaded until your employees hit that $7,000 limit. Okay. Restaurants and manufacturers have higher workers' comp premiums. So that rule of thumb for them might be closer to 15 cents or 15% or 20%. Okay. Payroll taxes and due dates. So these are the payroll taxes and payroll tax forms and the due dates. These forms, all of your payroll providers will do these forms, okay? So some payroll providers like Intuit or QuickBooks, for example, you have to go through and click all the buttons and tell them to file the form, but they should do the forms for you. The ADPs and the Paychecks and the Zenefits of the world will do these forms on your behalf without you having to do anything differently, okay? So that was kind of a lot of information. I wanted to make sure that all these made sense. And then one more thing about payroll tax deposits. When you work with a payroll company, and we're going to talk about this next, these deposit tax frequency, they're not going to come into your bank account on October 15th and take all the payroll taxes for September. They're going to take the payroll taxes every time you do a payroll. And so if you did a payroll on September 1st, technically, for most of us, those payroll taxes wouldn't be due till October 15th, but the payroll company is going to hold your money for 45 days to make that deposit. Okay. All right. Questions?
It seems like we don't have any questions.
Sweet. Look at that. I don't know if that's because everyone's bashful or I'm just an excellent teacher today.
I think you're just an excellent teacher.
Well, maybe I put them all to sleep. So, okay. So working with the payroll company. So you hire a payroll company to calculate your payroll, remit your payroll tax deposits, and file all your payroll tax forms. If there's a missed payment, the payroll company will pay the penalties and interest, but you still have to pay the tax. If you receive a notice in the mail regarding your payroll, you send it to the payroll company to handle, even if you change the service. So for example, if you get a notice in the mail from the Department of Economic Security that says, hey, Tanya, you owe us $200 in taxes and $15 worth of penalties and interest, I send my payroll company a copy of that notice. And if it's true that I owe that much money, I have to pay the $200 in tax that I owed, but the payroll company will pay the $15 in penalties and interest. Any decent payroll company will do this. If they don't do this for you, don't hire them, okay? But because they didn't take the taxes correctly or my rate changed and I forgot to tell them, whatever the reason, if there's tax that's owed, I would have to pay it, but not the penalties and interest, okay? If you get a notice in the mail, first, most notices, official notices, go unopened. So first, open it, figure out what it is, and send it to your payroll company. You don't have to know how to handle it. Like, that's why you pay them, because they're the expert in that field. So you hire them to take care of this stuff for you. Sometimes some payroll companies you really have to follow up with, okay? There's a few in town that, like, I have a client that he likes to hire employees in a lot of states. And so he probably has like 7 or 8 different states that he files payroll taxes in. And I probably get 2 notices a quarter that there's something missing. So, which is super frustrating for me, because that's why we pay the payroll company, is to file the payroll tax returns on time. So I would say make sure that they're doing a good job, but sometimes you might have to follow up with them to make sure that they're doing that good job. Okay, so when you work with a payroll company, the fees are based on the frequency and the number of employees you have. Some companies have one person that's assigned to you, and some of them have 800 numbers, and now some of them just have chatbots. They all have add-on services, which we'll talk about. So pick the company that makes you the most comfortable. When I say the fees are based on the frequency and the number of employees, if you have to run a weekly payroll for 5 employees, it's going to cost you more money than if you have to run a semi-monthly payroll with 5 employees, right? The way that payroll companies usually price it is it's X dollars for a weekly payroll versus Y dollars for a biweekly payroll versus Z dollars for a semi-monthly payroll, okay? And then they add per kind of employee cost. It should be roughly, probably no more than like somewhere between $45 and $55 a payroll. Like, let me rephrase. It should be about $3 per employee that you're paying, but there's going to be minimum amounts. So the lowest I've seen it is $45, and between $45 and $55. So if you only have 3 employees, no payroll company is going to charge you $20. They're going to charge you $45. Okay. So, but if you have 10 employees, they're still not going to charge you $30. They're going to charge you $45. So once you kind of get over that like minimum amount of somewhere around, it should be less than $60. Once you get over that minimum amount of about $60 at the most, then it should only cost you $3 each extra employee. Okay. So if you're paying 20 people, that's $60. You're paying 21 people, it should be like less than 65. Make sense? About the 800 numbers and chatbots, literally, again, it's just a preference for you. Like if you don't, like I have my client that has employees in 800 states that I was just telling you about. So he's a technology company and he doesn't mind that it's a chatbot, like he doesn't care that he has to chat with somebody. He can't pick up the phone and call. So when I say add-on services, they're going to sell you handbooks, labor law posters, 401k or retirement plans. They're going to sell you timekeeping systems. They're going to it just goes on and on and on. All the different services they offer. Usually they also have workers' comp insurance too. Usually when you're working with a payroll company, they deeply discount their payrolls so that you buy all those add-on services. And those add-on services are where they make a lot of their money. So just make sure that if you choose to use a payroll company for those extra services, that you're getting the best deal and it makes the most sense for you, okay? So for example, like I don't like to typically use the retirement plans that come with the payroll companies because I know how to do it myself, if I do it myself or work with another partner outside the payroll company at an investment bank, for example, like, the Morgan Stanleys of the world or the American funds of the world or Vanguard or whoever, then I can get better pricing working directly with them than doing it with the payroll company. However, some people like the convenience of doing it with the payroll company, and there's nothing wrong with that, but just know that you're going to pay for that convenience, okay? And then pick the company that makes you comfortable. Pick the company where you can pick up the phone and call somebody and say, this thing is broke, I need help fixing it. And someone's going to help you navigate that, all right? So how they work is you tell the payroll company the amount of the gross pay for each employee, however you choose to do it, online, email, or fax. We used to fax, nobody fax anymore. I should probably update my slide. This will tell you how long I've been doing this presentation, but so usually like you can do it with apps, like there's a million ways to get the information. So the payroll company, they all have different ways. So just talk to them about that when you're buying it. And they all have demos, so you can see it all before you buy it too. The payroll then gets calculated, meaning that I pay $1,000 of gross pay. Here's all the employee taxes that come out. And then paychecks are direct deposited, or paychecks or direct deposits are sent to your employees on the paycheck date, okay? Sometimes if they're issued physical checks, you can write those physical checks. Sometimes they're FedEx to you. Sometimes they're FedEx to your employees. Sometimes they can be mailed, like there's a million options there as well. Then the payroll company usually will deduct all of the net pay from your bank account the day before the check date. So let's say that Friday the 15th was my paycheck date. My payroll company is going to come into my bank account and they're going to take out that $1,784 or whatever it was for my 2 employees that got $1,000. However, on the 15th, they're going to go into my bank account and take all of the payroll taxes, both the employee part that was deducted from their check plus my employer match, okay? On the paycheck date, they're going to take all the payroll tax deposits. So remember our example. I know you love it when I flip through the slides, but so here, the payroll company is going to take $1,700, $1,800 from us, the $883 in net pay, and the $910 worth of net pay, those 2 amounts together. They're going to take that from us on Thursday, even though the paycheck date is on Friday. And then on Friday, they're going to take the $120 from employee number 1, the difference between the $1,000 and the $880, and then they're going to take the $90 for employee 2, plus they're going to take the Medicare and Social Security match for both employees, plus the federal and state withholding. So on Friday, I would pay, the $120 plus the $80 plus $62 twice, plus $14.50 twice, plus $23 twice, plus $8 twice. Okay. So first, just some tips about payroll companies. Make your pay period end on a date that makes sense to you, okay? Sunday is a very common day to end your pay period. Monday starts the pay period, Sunday ends the pay period. Leave yourself time to calculate the hours, the gross pay, and report the payroll. So make your paycheck date 4 to 5 days after the pay period ends. So for example, if you want to have a weekly payroll, you would have your pay period end on Sunday and your paychecks could be issued on Friday, because that means you have Monday and Tuesday and some of the day Wednesday to report that information to the payroll company so that they can calculate the checks, take all their money on Thursday and more money on Friday, and your employees get paid on Friday. In Arizona, employers must pay their employees at least twice a month, no more than 16 days apart, and within 5 working days of the end of the pay period. So let's talk about that. In Oregon, to preface that, I hate doing my own accounting, okay? So every time I have to do my own accounting, I'm like, this sucks, and I need to hire somebody to do this for me, right? But in Oregon, when I lived and worked in Oregon and only had a firm in Oregon, Oregon allows a monthly payroll. So I would pay my employees once a month and that was it, right? Because I didn't like doing payroll and I didn't like doing my own accounting. Arizona doesn't allow a monthly payroll. You have to pay your employees at least twice a month in Arizona. So now I pay my employees for a pay period from the 1st through the 15th with paychecks on the 20th, and then the 16th through the end of the month with paychecks on the 5th, because that meets the Arizona standard. And if the 5th or the 20th falls on a weekend, for example, then I pay them the Friday before. Most employers, if you do a weekly payroll or a bi-weekly payroll, meaning every week or every other week, then you're not going to have this problem because you're going to end your pay period on Sunday, for example, and your paycheck date will be on Friday. All right. So it's only when you have those semi-monthly payrolls that it matters. And remember too, that if you have a weekly payroll or a bi-weekly payroll, 2 months every year, you're going to have 3 paychecks or 5 paychecks, okay? Just because of the way the weeks fall, all right? Okay, questions?
Yes, we have one question. Payroll companies just handle the payroll, or can they, can they also help you with the forms and contracts when you hire an employee?
So some of them will, and it will be an added service. So, but they'll help you get, like for new hires, for example, like they'll help you make sure that the W-4 and the A form and the I-9 are filled out correctly. Like they'll give you a direct deposit form. So sometimes they will. Some of them will help you write the offer letters. Some of them won't. So it literally all depends on the payroll company, which one you choose.
So we have another one, and it is, I am planning to convert my restaurant from sole proprietor to single member LLC. Best advice to set up the payroll.
So in both of those instances, if you're a sole proprietor and you then you form an LLC, like your tax ID number is going to change. So because right now as a sole proprietor, you might have an EIN number, but that's assigned to you as an individual and not to an LLC, which is an entity all of its own. So your tax ID number is going to change, which will, if you have payroll now, will mean you will stop that payroll under that employer identification number, and you will start a new payroll under a new identification number. Secondly, if you don't tell the IRS to do something different, you're going to still file the same Schedule C form with your 1040 for your taxes, for your income tax, and you will still not be an employee of your own company. Even though you're an LLC, you're not going to take a paycheck as an employee. You're just going to take money out of your bank account whenever you need it to pay your personal bills. Okay.
All right. Those are the only questions we've had so far.
Perfect. Okay. 1099 miscellaneous and next. So the purpose of a 1099 is used to report certain types of payments during the course of your business. Forms are due to the recipients by January 31st for the prior year. IRS copies are due by January 31st for the prior year as well. And if you file electronically, you have until February 28th to file electronically. So consider using an electronic filing service. I personally use a service called Tax 1099, like tax1099.com. Okay. So it's not free, but it's pretty reasonable. So it's a little bit cheaper than QuickBooks does it. So what form do you use? For a 1099 miscellaneous, you report miscellaneous income, royalty payments, rents, legal settlements, and other types of, there's other things on the form like golden parachutes and certain fishing boat proceeds, which in my life I've never used, but I love to fish. So I kind of want to report something in the fishing boat proceeds box one of these days. The 1099 NEC, it stands for non-employee compensation. And you use this form to report payments made to all people that provided services to your business that were not an employee. You report payments for legal services here. So, for example, let's say that I hire an attorney to write my new terms and conditions for my accounting clients, okay? I'm paying that lawyer for legal services, so that goes on a 1099 NEC form, the non-employee compensation form. Let's say that a client sues me and the court awards them, let's say I lose and the court awards them $10,000. I make that $10,000 payment to their lawyer. That's a legal settlement, and that gets put on the 1099 miscellaneous form. Most of you will not put lawyering things on a miscellaneous form. You would put it on the NEC form, okay? The reason that you report these things to the IRS is because there's a tax gap. So you know how there's on your income tax forms for your businesses, if you've seen them, regardless of what they are, there's a box that says like professional services, okay? And then we tell the IRS with our tax returns what kind of business we are. So I would tell them I'm a professional service business. So what happens is that people might deduct $2 billion worth of professional service expense from those boxes on their tax return, but us professional services companies are only reporting $1.5 billion worth of income. Okay, so that's the tax gap. So these forms are used to narrow the tax gap. The payments that you make to someone are, for example, like if you notice that rents are on here, so if you have a landlord, if you're renting any kind of space for your business, you would report it on the miscellaneous form. If you were to hire an accountant, for an example, you would report it on the 1099 NEC form, okay? Because it's non-employee compensation. So it's payments made for someone that provided services to your business, okay? Lawyers go on a NEC form, website designers, SEO companies, marketing companies, janitors, repair people. If you have to have someone, like, let's say your business, you own the building your business is in and the air conditioner breaks and you have to hire someone to come and fix it. Like those, any kind of services that are provided to your business get put on a NEC form. There are two kind of exceptions. So first is if the business is a corporation. So my accounting firm, for example, is a corporation. So all of my clients don't have to, even though I provide services to them, because I'm a corporation, they don't have to give me a 1099 NEC form, okay? The second exception is, in most instances, all of these things have a $600 threshold. So if you pay someone $599 for services, you don't have to put it on the NEC form, on the non-employee compensation form. However, this is what I'm going to caution you about. One, when you go to pay someone, like let's say that's January 1st, and as like you hire an accountant, they send you a bill on the 1st of February and say, here's my bill, right? So first, you have no idea if you're going to pay them $600 for that year, right? Because it's February and you could hire them to do something for you in February and then have them back to do something in March, but maybe not use them again till August, right? You have no idea when you start to pay someone at the start of the year, how much you're going to actually pay them for the whole year. So when you get that first invoice from them, you say, thank you for your invoice, send me your W-9 information, and then I will go ahead and process that for payment, okay? Ask for your W-9s up front. The only way that you're gonna know if someone's a corporation is if they provide you a W-9, and if you don't have the W-9, the burden falls to you to report it to the IRS, okay? The other thing is when you do send out these forms, inevitably, like 9 times out of 10, you're going to get a letter back from the IRS that it's called a TIN mismatch letter, TIN. And it means that the tax ID number that you put on your 1099 forms, whether the miscellaneous or the NEC, doesn't match the name that the IRS has on file. But it literally could mean the difference of, like, if you spelled my name T-O-N-Y-A instead of T-A-N-Y-A, you're gonna get that TIN mismatch letter. In that instance, follow the instructions. Basically, all you do is request a new W-9 from whoever you paid, and you make sure that the information you put into the system matches, that you didn't transpose something in their tax ID number, or you didn't spell something wrong, all of that kind of thing. Okay? Make sense?
We do have a question, Tanya. If we don't pay over $600 a year to someone, do they need a 1099 NEC?
You don't have to issue a 1099, but you need a W-9.
All right, thank you.
You're welcome. Okay, let's talk a little bit about the PPP and CARES Act. And I feel like this horse has been beaten already, so I'm just going to kind of go through this fairly quickly, but please let me know what questions you have. So they expanded the allowable costs under the PPP to include, so it was payroll, mortgage interest, rent, and utilities, but now it includes covered operations expenditures. So payments for any business software or cloud computing services that facilitates a business and operations, okay? So remember I was telling you about my client that does the IT services. So for example, their services will be part of this covered operation expenses. property damage costs. So remember, like the property damages from the protests that happened in Portland, Oregon over this last summer or 2020 summer, those property damages are covered by the PPP now. And then covered supplier costs are costs that the borrower makes to cover supplies that are essential to the operations or pursuant to a contract or a purchase order. So again, like these things, the way they expanded this, it's a lot more beneficial for the borrower of the PPP. And then covered worker protection. So these things, for example, like if you built a drive-through window in your restaurant, you included an air pressure or ventilation or filtration system, like these things would be covered worker protections. All of these costs kind of, in my opinion, fall into a very gray area. So use your judgment about like whether it's includable or excludable. And if you decide that it is includable, write down why you expected, like why you thought it was includable. So because then you have like ignorance is not a defense when it comes to government programs like this, but you want to just document your understanding based on the rules. This is what you feel like where it's covered, okay? Any payroll tax credit, because there's a Families First COVID Leave Act, cannot be reported as PPP wages because you're double dipping in federal funds. So for example, the Family First Act said that if you have an employee that has to quarantine for 2 weeks, you can still pay them and the government will reimburse you for paying them, okay? But if you, like, let's say it's $1,000, we'll use our $1,000 example. So let's say I pay an employee $1,000, I claim a credit for the Families First Act for that $1,000. I can't then use that $1,000 as PPP wages, okay? I have to back it out of that. Make sure you keep good records, keep copies of all your receipts, cancel checks, your contracts, your leases, have all of your documentation ready. Track your expenses as you go throughout the covered period. We're probably outside all of the covered periods for the second PPP loan. If you didn't track it, go back and do it now. Your PPP forgiveness is not taxable at a federal level. It's also not taxable in Arizona, and the expenses are deductible, okay? The EIDL, the economic injury disaster loans, most businesses are eligible to apply. The EIDL advance was up to $10,000. So it was up to $1,000 per employee, up to $10,000. It is not taxable income. Those EIDL advances ran out somewhere in like March, well, sorry, in like May or June of 2020. But if you did get an EIDL loan, an economic injury disaster loan, that is a loan and it has to be repaid. They just announced, because there were so many people that applied for the Restaurant Revitalization Fund, and that bucket of money ran out way sooner than anybody thought it would, that the SBA came back and is allowing people to apply for extra, like additional EIDL funds, additional economic disaster loan funds. So let's say your business got an EIDL loan in 2020 for $50,000. You can go back at this point into the portal and ask the SBA for more money, okay? There are some rules about it. They're gonna ask you lots of things. Most businesses are qualifying, but there are a lot of hoops to get through because it is an SBA program, okay? So just know that. And then I'll let the SBDC team talk about it more, but I'm pretty sure that they have places you can go to get help with these products, okay? The reason I wanted to talk about this was because of the employer retention credits. So the employer retention credits, or the ERC, you have to have had income that was reduced by a certain percentage. So these are the 2021 figures. Your income in 2021 has to be reduced by 50% compared to the income compared to the same period in 2019. So you're going to go look at 2019's revenue from January through March, and then you're going to look at 2021's revenue from January through March. And if your 2021 revenue is 50% of what it was in 2019, then you would qualify for the employer retention credit. At the start of COVID, so in last year, in March and April of 2020, employers had an option of applying for the Paycheck Protection Loan or getting the employer retention credit. Most of us chose to get the PPP loans, okay? What happened then is, because of the system and the way our government works, the rules changed in December 2020, meaning that it was not an either or thing anymore. So even if you got a PPP loan in April or in August of 2020, you could still apply for the employer retention credit. You can't double dip, okay? So I want you to picture a timeline, like from social studies class, like when we were all in 3rd grade. And if you're starting at January and we're working our way through December, let's say you got a PPP loan that in the first round, let's say you were a lucky one, you got a PPP loan in the first round in April of 2020. So your employer retention credit, it starts, there's a start date in March. So January through March is nothing. March to April is eligible for the PPP, but then April it stops because you have your, sorry, I'm going to say that all over again. January to March, there's no eligible money because we were operating like normal, okay? In March to April, you're eligible for the employer retention credit, but once your PPP comes in April, you stop being eligible for the employer retention credit. So then you use your PPP money until August, right? Or whenever it runs out. Then your PPP stops in August, and then from August to December, you're eligible for the employer retention credit again, okay? So think of the retention credit as the bookends to, pardon my French, but the poop storm that was 2020, okay? So the reason the employer retention credits are really cool is because if you paid an employee in 2020 $10,000, you get a $7,500 credit per employee per quarter, okay? Which is a lot of money if you think about it. In 2020, the rules are a little bit different. So you still have to have an income reduction, but it's 20%, not 50%. And it's still measured over 2019. And the rule is it's up to, it's $5,000 per employee for the whole year of 2020, okay? And you had to have paid that employee $10,000 in 2020. So to talk about this some more, if I paid an employee, let's say my revenue in first and second, we'll say second quarter of 2019 was $100,000, and my revenue in second quarter of 2020 is $50,000. I have a 50% reduction in my revenue, so I qualify for the retention credit, okay? Then if I pay an employee $5,000 in that quarter of 2020, I get a 50% credit, so I would get $2,500 back from the IRS, okay? Then let's say I paid the employee another $5,000 in third quarter. My revenue was still down in 2020 compared to 2019. I would get another $2,500 credit, and that employee would be done for all of 2020. But starting January of 2021, if my revenue is still down by 50% in first quarter of 2021 compared to first quarter of 2019, I paid that employee $10,000 in first quarter of 2021, I would get a $7,500 credit, okay? Note, I made all of this overly simple, okay? That it's not terribly complex, but it is something that, like, if your revenue is down significantly, 20%, 30%, 40%, 50% or more, you need to look into this. So I have a client that's a brewery, and their employer retention credit for 2020, even though they were closed for most of the year or forced into limited operations only on their patio, they qualified for $67,000 worth of an employer retention credit, which as soon as the government refunds it, then me and the owners are going to take all the cash and run off to Italy or something. So this, like, the reason also that I bring it up is because when we talked about the costs that are covered for the PPP, the first one here is payroll costs. So if you got a second PPP loan and you have not applied for forgiveness, be sure you still have to meet certain percentages to have your PPP. You know, you have to spend so much on payroll, 65%, but make sure that you're maximizing all of the other things on this list so that you're reporting only 65% for your PPP, so that you can use all of the other wages that you paid in 2021 for the employer retention credit, okay? Because there's two things out there, so you have to be kind of careful, and you can maximize and do a little bit of planning so that your PPP costs are more interest, rent, utilities, operational expenses, protective equipment for your employees, all that kind of stuff, and only the portion that's needed for payroll, so that you have the payroll expense left over to claim the employer retention credit, okay? Which is totally allowable by law, all right? Like what I'm telling you isn't, this is not even a gray area of the law, all right? So this is the IRS FAQs here. So it's irs.gov coronavirus employee retention credit. Just know that like it's written as legalese. There's a million companies that will calculate this credit for you. Most of them will charge you a hefty fee to calculate the credit, but at the same time, if you're leaving $67,000 on the table, paying a company $10,000 to file the credit for you might not be so bad for your business, you know? So look into this. However, I'm just going to tell you, payroll companies will likely not do this for you, okay? I haven't found one yet that will calculate the credit. So what happens with payroll companies is you have to calculate it outside of them, and then you give them the wages that are eligible by employee by quarter, and then they process it and amend your returns, and then you would get the credit, the cash back from the IRS. The IRS is also taking a super long time to apply for those, to refund those retention credits. The client that I told you about, the brewery, we applied for those retention credits. I think they were submitted mid-March, and we still haven't had them refunded yet. And it's already so it's been 6 months since we applied for the credits. So, all right. As promised, here's my email and my phone number and my website, which you should go check out because there's a Chuck Norris joke randomizer at the bottom. So if you're having a bad day, go read some Chuck Norris jokes. So, all right, questions. I'm sure there are more than a few.
We actually don't have any questions.
Sweet.
Everyone's just understanding everything you've just said, especially the employee tax retention.
You know, the retention credit is super great. So this, I wanted to show you the sick leave and the rules about doctor's notes. So the Industrial Commission of Arizona is the one that regulates the sick leave, and I'll post this in the chat. So here, these are all, like, if you go into the frequently asked questions on this state's website, like it'll tell you like if you're allowed to ask, you know, like, let's see here. Yeah. Can an employer require employees to document absences? So if you just click on that on the question, then it will tell you yes, but only if an employee uses sick time on 3 or more consecutive work days. Okay, so that was the rule. So it's kind of what I thought. I just wanted to make sure. So, and then what it can be used for is a different link. So then you can click on that link and then jump around. So it's any kind of medical family emergency need. So most of this stuff, like, remember too, that most of these things, like, you know, this is designed to tell you, like, here's some things that you need to know about having employees. You don't have to be an expert in how you're going to, you know, calculating the payroll, what gross pay versus net pay. Like, you don't have to be an expert in that. You don't have to be an expert in most of this, but you need to have a general understanding of it to make sure that you know, like, here's where my liability is, or here's where I need to pay some closer attention, you know? If you have questions, like, most of your tax accountants or tax preparers can help you with this. Ask the SBDC, like, they have business advisors, and there's tutorials and FAQs and whatever that they can walk you through as well. So, you know, there are a lot of resources out there to make sure that as employers, we are doing a good job. But mostly just don't be a jerk and try to take advantage of people, and then you're going to be fine. So there's one thing else. I say that, and I'm gonna say there's one thing else, and then I'm gonna come up with the 6 other things. So eVerify, I'm just gonna show you this website. And hopefully it doesn't just log me in with my password manager. It did. So hold on. Okay, so this is the eVerify website. And the reason that you go here, it's not going to let me go back. It's because I have it saved. Yeah, I thought so. All right, so it's just going to prompt me. It's going to stick me here. But when you go to eVerify, you need to register to be an employer before you hire employees. And there's a little test that you have to take to make sure that it's still going to take me to the login page. So when you go to when you first sign up for eVerify, you need to take a little test and understand how the system works and things like that. It is not hard. Even if you wanted to, you could Google, because all the answers are out there, and then you can just, you could basically, it's an open book test. But you need to register in advance of hiring an employee for eVerify. It's not something that happens overnight. There is a link in the slides for it, and the SBDC will send them out to you. But then the Arizona New Hire Reporting site, I want to show it to you because it looks like the scariest, it looks like a fake website. So this is it. I mean, it's super cheesy looking. It looks fake. You have to register here, but basically you just tell it where you are and all that kind of stuff. And then it's going to give you the information that you need. Both of these sites, you just enter the information that your employee tells you on their I-9 form into these systems. You use the Arizona New Hire Reporting in case there's any kind of garnishments or something like that. Okay. So I have the chat. Where do we get all the forms, the posters that need to be posted for employees for opening a new business? Shocker, on the Industrial Commission's website. So let's see if I can find it here quickly. Resources for employers. And here's the posters for the sick leave. Here's the minimum wage posters. There's if you search here on the Industrial Commission's website, it'll be there. But they're all here somewhere on the Industrial Commission's website. If you get really stuck, then ask Mindy. And that's her email. I just put it in the chat. So just send her an email and tell her you were in the class and you need the labor law posters, and she'll send them to you. You can buy them. There's a company called Personnel Concepts that will send them out, and they'll send you big laminated things, but they'll charge you $30 or something. So if you're just starting out, you can get them all for free, but they're going to print off on an 8.5 by 11 piece of paper that then you'll have to tape up somewhere. But either way works, no big deal. So what else can I answer for you guys?
I don't see any in the Q&A chat either, in the box.
Okay. Perfect. All right. Oops. Here's my information one more time. Oops. Wait, there you go. So please let me know if you have any questions. Use your business advisors at the SBDC. So they are an excellent resource, and more than once I have referred them clients. So I think they do great work, and congratulations on wanting to hire employees, everyone.
Thank you, Tanya. We're gonna have Anna do a little closing. So she'll be sharing her screen.
All right, thank you so much. That was a ton of information, but so great. You deliver it so well, and you just made payroll fun, which is quite a talent, I think. I know I saw some of the comments, people are trying to soak it in, and it's a little overwhelming with all that information. While Tanya sent her contact information out, the SBDC counselors are here to help you. There's so much to go through. So if you are not currently a client, please take the time to sign up for counseling. I'm sure we can put that link in the chat to make it easier for you. But the way it works is you'll fill out a short form to request counseling. You'll be assigned a counselor depending on what your needs are. So you can let us know exactly what type of assistance you're looking for. You'll be assigned to that counselor. You'll then be called for an initial session where we'll go through your business goals, the history of your business, let you know more about what we do. And again, this is all no cost to you, which is a phenomenal service. So please take advantage. Once you have that initial session, you'll have follow-on sessions with your counselor as needed. Normally, we don't go any longer than 60 days with talking with our clients. If you need more time, that's okay. If you need less time, that's okay too. We're here to be individualized service for you. Once we start identifying some of your goals, we help you track those, report some metrics back. And counseling is by appointment only. So please fill out that form. And then we will take it from there and make sure you are taken care of as an SBDC client and help your business grow and succeed. We do have a few other upcoming events similar to this. They are, again, no cost to you. Tomorrow, we have angel investing, which is really interesting at 9 a.m. Grow with Google, we have a whole series of these going on, and that'll be Tuesday, October 26th. Another Grow with Google series, Selling Online, will be November 16th. And then we have an international logistics strategies, which is really cool, coming up in November on the 17th. So you can go to the link there to register, and we will see you at the next SBDC event. Thank you so much for attending.
Thank you so much, everyone. Thank you, Tanya, for the presentation. I'll be sending everyone, there will be a survey after this webinar ends. If you could give us some feedback, we would appreciate it. That would be helpful for us so we can help you provide some future programs that will help you. I will be sending within 24 to 48 hours a recording of the webinar as well as the PDF of the slides. Once again, thank you, Tanya, and thank you everyone for joining us today. We hope to see you in future webinars. Have a nice day. Bye-bye.